Soul is aching, don't wanna fight in this war with myself. Can I make it another night? I've been wanting and wishing and waiting. I've been haunted by demons and aching, so damn broken. I swear I can't take it anymore. I am fragile, crumbling on the edge of a breakdown. Lost the battle, trapped in the pain with no way out. I am fragile, crumbling on the edge. I am fragile, I swear I can take it. Lost the battle, oh, damn broken. I am fragile. Got my back up against the wall. Keep on praying, but still I fall. Hard to cope here alone. Beg for help, but you never call. You never call. I am fragile, crumbling on the edge of a breakdown. Lost the battle, trapped in the pain with no way out. I am fragile. Did you know I'm picking up the pieces of my soul? I lost control and I can shake the feeling on my own. 'Cause I thought you were the light that was breaking through my eyes, but I miss what you had inside. That feels you can deny. 'Cause I thought you were the light. 'Cause I thought you were the light that was breaking through my eyes. 'Cause I thought you were the light.
Yo, what's going on? What's going on? Hope you guys are having a good day today. Oh, and we're gonna do this on OBS. We're gonna do that. Something like that. So we should be good on volume. Real quick, let's get a sound check while we're here. while we're here, let's get a sound check before we get too far into it. Good vibes from Naruto. What's good? What's good? Adnan, I think that's how you say that. Alex, Ali, those snipers look great. And in like 3 weeks, they'll be a different color as well. I'm excited to see that too. What's good, Mr. John Hudson S, winner of our leather journal giveaway yesterday. That'll be at your place tomorrow. Ricky Lawyer, what's good, man? You think Indices climb to finish today? That's a possibility. I'm done for the day, though. I'm done for today. So if they climb, that's great. If they fall, that's great. I'm indifferent. Either way, because I'm done. I'm done. Either way it goes, don't care. Do not. But we're good on the sound, right? Alan says we're all good. Okay, great. Great. What's good, Soli Main? What up? So, man, today has been awesome. Today's been super spectacular. Super spectacular. I know I've been on Twitter. I've been on Instagram today. Today was a chef's kiss kind of day. You know what I mean? Do we still have that emoji? Do we still have that emoji in the chat? The chef's kiss? Because today would be a good day to drop that. Look at this bullshit. Look at this. Dark magic to predict market's future. People have resorted to tarot cards for the market. What the fuck is that? What kind of devil shit is that? Trading view. Tarot cards. Are you serious? Are you serious? That is absolutely absurd. I can't even believe they would do something like that. I can't believe that. Okay. Excuse me, sorry, I just had lunch. I tried to hurry up and finish that. I was running a little bit late today. That consolidation and then to the high mitigation setup played beautifully. Oh, it definitely did. It definitely did. Pre-market. And I traded that first retracement at 9 o'clock. I told my personal students, I told Twitter as well. And yeah. Let's pull that up real quick. Just pull that up. Yeah. So that was at 9:02. Okay, at 9:02, 41.48 lows on S&P. Interesting. So what you can do, if you didn't know this, you can share it and then copy the link to the tweet. And then go into Trading View, go to this tweet button, and then you can paste it in there. And it will timestamp it and everything. It'll show you exactly when tweets were posted. Okay. Now I wasn't trying to necessarily time this market per se. But 9:02 is when that was sent. And you can see what we've done today. Ridiculous. Absolutely ridiculous. So, you know, why do I share my social media with you guys? Is it to, you know, get more followers or to try to get, you know, 100,000 subs on YouTube and stuff like that? I mean, that would be kind of cool, but that's not the purpose. The purpose is for shit like this. Okay? For stuff like that. And then if we do this one, 41.20 on the table. It was supposed to be, it ain't even lunch yet, but I always get trolled. And look at that, like no likes. 140 views, no likes, right? But then we come in here into Trading View. And it's not gonna line up perfectly unless I warp the chart, but it'll still show you when that tweet was sent. Which was on the way down, of course, but then it rallies and then it dumps 41.20. And that is right there. Okay. So overshot, went down to 41.15.5. So it went about 4.5 points past 41.20. That's fine. That's okay. That's okay. But look at that, man. Look at that. This is why. This is why I do these things. Okay, it's not for, you know, look at me, look what I can do. It's, there is a possibility that you may be able to capitalize on stuff like this. Okay, because you can go into Twitter and you can see all my tweets, and I am wrong sometimes, but a lot of the times it's like this, bro. It's like this. Now, I don't want to teach you guys how to do this. I think I could. I don't want to. But if you see yourself doing stuff like this one day, think about what we talked about yesterday. Think about it. What did we talk about yesterday? Right here on YouTube. Not in secret, not just to my private chat or anything like that. This was public. We were on YouTube yesterday. And what were we talking about? What were we discussing? Well, ladies and gentlemen, 41.22.75 was these equal lows that I mentioned to you. Right there. And it's even better that we saw, well, just, we have pretty much that as consolidation. Even better. Even better, because we know when the market consolidates and leaves lows, right? Even though we were looking for bearish setups yesterday in the afternoon, well, I don't know about we, but we were here. So, but remember, we followed this along, but it spent a lot of time. The timing wasn't right, and it just presented no shorting opportunities. Okay, there's no trade, right? But then look at today. The market delivered another set of equal lows during London. Look at those lows right here, and majority consolidation as well. Just like I mentioned a second ago, even better when there's consolidation and equal lows. And then guess what? The market at 8:45, so we opened up at 8:30, dropped, but we didn't come down for these lows. We stopped at the tick, hit the reversal button. Now, when I looked at this today, I said, Lord, please give me a mitigation. Please give it to me. Give me a mitigation. But we didn't really have one coming off of this low. Like when we rallied here, there was no mitigation setup, but there was up in this area. See that? Look at that. High, low, higher high. We kind of dilly-dally here, but then we trade lower at 7:45. I wasn't up at 7:45. I mean, I was, but I wasn't out of bed yet. We're not going to discuss, you know, all of that. But 7:45, we break down past that. Then we trade up into it at 8 o'clock. So the mitigation play had already happened. It's already happened. What's good, Sebastian? The mitigation play has already happened here at 8 o'clock. So what am I supposed to do with that? Well, if that's already done, then the only thing else that we have available is some sort of order flow. Right? So this sell-off here, study that. Okay, I do this all the time for my students. I do this all for you guys as well. and I'm trying to like keep it on here where you guys can see. Look at this. Look at this movement from the mitigation down to 41, 48 and a half. And study this movement here. What do you see in there? What do you see within that? And real quick, while you guys are looking at that, drop a like on the video. We talked about these lows yesterday, guys. They got smacked today. If that's something that you can appreciate, that hit that like button. It helps the channel out. It helps us get in front of more people. And I would greatly appreciate that. Thank you. So what's good with this movement here? With that down movement? Is it an efficient market or is it an inefficient market? Efficient or inefficient? Mr. John says efficient. Is it though? Is it an efficient market? Why? What is your justification for this as a efficient market? Based on how the wicks went back to bodies. Okay. Look at this movement here, up here, right? Like, look at the size of the candlesticks, and then look at the size of these candlesticks here, right? Volatility, and that's fine because that's 8:30. That's our open anyway. Not efficient. Lewis says imbalance because there's some imbalance left. Okay, so here's the thing. When I look at this market, my attention goes here. Okay, that area right there. What is within that area right there? You have a gap right there. You have a gap right there. And you have a gap right here. Okay. And it is hard to draw without warping the chart. That's okay. But there are some gaps right there. Even though the market had rallied up to this particular point and then came back down, it still had opened with a gap. And then same thing there. It did trade past that, but it's still gapped on that. Okay. So Amran, yes, I would agree. Gaps. Okay. So now here's kind of the rule of thumb that I had is if you go to a 15-minute, okay? Today. Yeah. If you go to a 15-minute and you look at the same movement, what we came off of was the 5-minute. Now that 5-minute had like 3 gaps within it. Okay? It had 3 gaps within that. But the 15-minute only has 1. Okay? So those are the 3 on the 5-minute that we just marked up. I mean, you just watched me put that on the chart. But the 15-minute time frame only has the 1 up here. It only has the 1. Okay? And in terms of the range, we could probably measure that. We'll do a fib from London's high. That's not what I wanted. That's the extension tool. Retracement. Sorry. From that high down to this low. Okay. Those first two gaps in here were not even at a 50% level. Not even at a 50% level. So on that next candle here, 9 o'clock opens, we had some sort of news. It was like employment or unemployment data or unemployment claims, something to that effect. I don't know. Okay, but my tweet was at 9:02. That was only 2 minutes afterward. So the news doesn't even, it had no effect on my analysis. Like, to me, it didn't, I didn't take news into consideration. Okay, because it didn't matter to me, right? So then what does this market do? Okay, it comes up and it trades within that. Now obviously it overshoots that, but there was some news, there was some volatility there. I mean, what do you want me to do? Okay, what do you want me to do? There. Okay, so it overshoots that, and that's okay. It actually took out a short-term high at 824 and that 838 high here as well. So anyone trying to chase this market, where they're stopped above this high as well, and likely above these other highs here, but it just, the market didn't reach that far. That's okay. But to me, it doesn't need to, because again, this was that mitigation here. So if the market is bearish, it's unlikely that it's gonna come back up in this area. Okay, so what I looked at is we got our initial reaction and I went, oh shit, I'm too late. Should have got in on that, right? But guess again, on this movement lower here, what do you see? What do you see right there within those three candles? The three down candles right there. Did that create anything that may be of use? Ali says imbalance. Do you guys agree? Naruto agrees. Also says imbalance. Okay. So then, what becomes the target? First target, 41.48 and a half, because that's the lows from London. That's the lows from London. But you were here yesterday and we set alerts down here at 41.22, so that should have been on your chart. That should have been there. But man, that's all the way down at the 20s. We're at the 50s, right? Right. So what? Now the easiest target is 41.48. But if we hold a little bit or take partials at 48 and maybe hold to see if we get 41.20, because it's not guaranteed. Okay. Excuse me. Sorry. Like I said, I just had lunch. Apologies. Apologies. Okay. So when we came back into that, that's when I shorted. Okay. That's when I shorted. Now we did spend a few minutes around the entry here. We did. I wasn't, all too excited about that, but that's okay. That's okay. But look what's happening here. Look what's happening here. Really, really look at this imbalance here. It's being respected. Okay. Now, whether you do a box or I used to do this a lot, is the lines, okay? Like the gray lines. It actually used to be like dashed lines, but So 41.58 up to 41.60 and a quarter. That's the imbalance measured on this 1 minute time frame. Look at this right here. 9.12 and 9.13. Look at the bodies on that. Bodies on that. And the bodies here at 9.15. Respecting that imbalance, right? Runs to 41.48. Runs. Sprint. You get a little bit of movement here. Rallies, and then the absolute collapse. About 12 points or so. In like 5 or 6 minutes. Beautiful. Beautiful. Chef's kiss. Bam. There's your first partial. There's your first partial. Now, when I was looking at this earlier, I went, okay, 41.20 is on the table. But what we cannot do is come back to the entry. We can't do it. That would invalidate the idea. To me, in my opinion. However, on this sprint lower, what do you notice? You have yet again another imbalance here and another one here. Okay, now this is just a 1 minute. All right, what does price do? It gets past the first one. Okay, not a problem. Not a problem. Or I guess we would consider that not an imbalance because it wasn't respected, so it wasn't really a true imbalance. Okay, that's fine. Market comes up into this one here at 41.54, and then what does it do? It rips ass down, and it collapses down to 41.20, and this is where we are right now, back below those lows. We're back at 41.22. Look at that. Look at all of this as a picture. Okay, look at the responses to this price action. Mitigation, gap, imbalance, 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 imbalance. That's sick. That's disgusting. And you know what's even better is actually being a part of this move. Okay? Because this is the kind of shit that you can be done for the week on a Tuesday. And that's not a joke. That is not a joke. Look at this. Equal lows there. Not a reversal. Not every equal lows is a reversal. Not every equal highs is a reversal. Bam. We came down for those two. Again, mentioned yesterday. For free to the community. All you had to do was be here. That's it. All you had to do was be here. And these were outlined for you. It's in the recording, you know? There's no cap. There's no fucking going back. This was there yesterday. And remember, I'm pretty sure we set alerts down there. And we set an alert at 41.22 as well. Or 27, excuse me. At 27 as well. Both of those smacked today. Dow Jones, same shit. Same shit. Those lows yesterday at 7 o'clock that we had that alert, bam, that was also met today. Very, very similar story for the Dow. Right? Yesterday we looked for shorts, never got it. That's okay. There's nothing bad about being wrong. You just don't want to force something that's not there. Don't short if it's fucking bullish. Right? Okay, great. And Ali, this, you know, kudos to you, because remember yesterday you pointed out that the ETFs had ran the high, but the futures didn't. Now, I told you that I trusted the ETFs. Okay, but we didn't get that yesterday. But what do you think this high up here is? 33,856. What do you think that is? That's that daily high. From March 6th. That's that daily high. Yeah, exactly. You saw it too, right? So if you have that, and sometimes if you want to, if you're, I mark up liquidity the same, because I just know that it's liquidity, right? However, there are different levels to liquidity. Okay, there's, you know, obviously retail liquidity, and then there's institution, what I call institutional grade liquidity, right? So on a high time frame like this, that's going to be institutional grade liquidity. So if you want to thicken the line, or because this is going to take a lot of work on your part, but I mean, you know, if you are someone who does want to take the time, excuse me, if you are someone who does want to take the time to do this, then you can. But you know, you could write up on here daily, or even that's probably a weekly time frame too, but that's fine. You could write daily liquidity or institutional liquidity. You could do something like that, and then that way when you come down to the 5-minute time frame, now do you kind of see the importance of that? Because the lows that we outlined yesterday are right here, and I'm glad my webcam is the way it is because it's not covering that shit up no more, right? So we talked about these lows here, but look at our high of the day. Where is our high of the day at? That institutional liquidity. So we can trust, okay, with a certain, you know, level of probability, that the institutional liquidity that was swept here, right, that could be our high of the day, or that could be our stop if we're trading like super small time frames in here, right? So that to me is what I trust, saying, okay, well, we shouldn't trade past that. We could, but we shouldn't. And then here's the best part. Take these tweets off already. They're already there. Look at the NASDAQ up here. Look at the highs on the S&P. You have a high at 450 and a higher high at 540. Okay, I'm dreaming, markets are beaming. All right, so you can feel free to write that one down. Right, I'm asleep, not doing anything, catching up, right, after a long productive day. Still got a bunch more laundry to do too. I got too many clothes. I gotta donate this shit. I got too much. Okay, higher high on Dow, heading into that daily liquidity level, right? But then look at the NASDAQ. We have a lower high right there. See that? Yeah. Beautiful. So this is how you can determine this is manipulation. It's trading higher to tap into that liquidity, and the NASDAQ is lower. So that's how you know that this is manipulation. Come on, man. Come on. Look at this shit. Look at it. Man. If I was writing another trading book, today would be in there. I'm not. But today would be in there. 100%. Think about all the conditions. Think about the conditions that have been set for you. Monday was kind of an okay day, right? Not bad, but Monday left some lows. Tuesday, again, I say this all the time. This is just something that I do. Tuesday is the first day of the middle of the week, right? Because the middle of the week is Tuesday, Wednesday, Thursday. Okay? Because Monday's the first day, Friday's the last day. Those are typically like not my best days. Friday's my worst fucking day. Like if you force me to trade, if I had to take a trade every single day, and I did that for like a year, and you put all that data together, Friday would be like the worst day. I don't know why. It just is. And my best day is probably gonna be Tuesday or Thursday. Most likely Tuesday. Okay, days like today. All right. So Tuesday, great day to trade. We've got multiple sets of equal lows. We've got our storyline of manipulation up here, and then we get our willingness to trade lower at 845. Doesn't sweep the lows, even on the micros. It doesn't. Okay. And then that when it comes up, that first leg up, or even sometimes if there's a different setup, like a higher imbalance, then it may even do that, and that's okay. But the high's been set, the lows are ready to get tagged. Guys, look how fast this was. Look at this. That was the only retracement in that whole area. There was almost no retracement after that. Except for, oh, this is the one I was trying to show you earlier on the 5 minute. Because that 1 minute had 2 imbalances, but there was a 5 minute one here too. That, I mean, that was like your last chance. If you were trying to gun for 41.22, that was your last chance, because everything else, very shallow retracements. Very, very shallow. This is the kind of order flow. If you set your orders too high, you never get filled. Oh man, when I tried a 618, didn't get filled. I tried a 786, didn't get filled. Right. Because the market is so bearish, it has no reason to dig that deep of a retracement. It's gunning for 41.48 and it's gunning for 41.20. If the algorithm is going to reprice lower, you think it wants to give you a chance to come back and get you in? No. The market is not designed to do that. The market is not designed to just hand you trades on a silver platter. It's not for that. The market is here to rip your face off. The market is here to take your money. That's why trading involves a lot of risk, and you can really lose your shit. That's why we have so many risk disclaimers and stuff like that too, because I mean, it's a real thing. Especially if you trade futures, your account can go negative. You're not supposed to be profitable, right? The way the markets work and the way they set up, you're not supposed to be profitable. Okay? So in times where it's obviously bearish, there's going to be no chance for you to get in unless you go on really small time frames. But shit, dude. Shit. You think I want to be shorting up here or right here, or you think I want to be shorting down here for a small move? Now those small moves are still okay. I've taken trades like that. I've shown you trades like that. But dude, the better entries are going to be way up here. And I know that's way obvious. Well, yeah, John, no shit. Sell high, buy low. Right. But what I'm saying is, if you don't get in early on days like today, a lot of the times there's not going to be a retracement for you. And you're just going to be stuck on the sideline watching it rip lower. And you're going to be watching everyone else do shit like I do and fucking make reels and stuff, and show off entries and exits and things like that, and you're just going to be on the sideline. Well, I missed it. Yeah, you missed it. Okay, look at the NASDAQ too. The NASDAQ did help me out as well. If you watch this, look at the time. Look at the time here. 9 o'clock and then 9:30, 9:35. So 9 o'clock is here, and it does run up a little bit higher at 9:10, drops down 9:20, and then here's that 9:30, 9:35. That same imbalance on the S&P, same imbalance on NASDAQ. Okay. Oh, what the fuck? I think my computer froze there for a minute. The same imbalance on the S&P was seen on the NASDAQ too. Look at the bodies there. Now that was a 618. That was a 618. Can we get a sound check real quick? You're good? Okay, appreciate that. Woke up late today and missed it. Yeah. Well, here's the thing, John. Let me tell you. I usually sleep in on Fridays because I'm usually done by Thursday anyway. Now, it's okay to sleep in, I would say, on Mondays. Sometimes Monday's kind of a shit day. But I would avoid sleeping in on Tuesday, Wednesday, and Thursday. Now, if you trade Tuesday and Wednesday and you kill it, then you can be done and sleep in on Thursday and Friday, and that's fine. So if you're going to sleep in on certain days, Okay, like for me, if I know I want to sleep in, you know, if I stay up too late and I know like, oh yeah, tomorrow I'm not waking up on time, then that has to be like a Wednesday night or a Thursday night, you know, something like that. Okay, Tuesdays is my, you don't want to sleep in on Tuesday unless there's FOMC or something that you don't want to trade, like you, or like if there's news really early in the morning and you know you're not going to trade that and you'd rather, you know, wait for news and then play something later, then yeah, it's okay to sleep in an extra hour or two and, you know, let the market open and do its thing. Or maybe just say, screw the morning altogether, I'll just trade the afternoon. Like that's fine too. So I'm not saying wake up on time every single day. Plus I couldn't tell you that because I don't do that anyway. So that would be hypocritical of me for you know, wake up on time and then I fucking sleep in. You know, that would not be, that would be hypocritical of me to do so. Yesterday we also talked about the euro, 109.26. We talked about that. So euro, I mean, kind of a similar story. We really got no retracement that I would want, at least. I mean, this was doo-doo McGee. This was doo-doo McGee. If anything, the move that I would want was during London. And there's a little bit of London pre-market here. So take a look at this. And again, I'm not up at this time, so there was no way on earth I would have been able to do that. This consolidation in here, actually, probably just, I guess like that. So we consolidated, we ran higher, and then we dropped lower. So we got buy stops in, bam, we got sell stops in. Then the market rallies at 1:25 a.m. and then it kind of just blips down right into this up candle right there, which I would see as a mitigation on a 5-minute time frame. Price rallies, drops down. There's an imbalance right here as well. At the, well, not even at London Open yet. So still like pre-London there. And then it runs for 90 or 109.26, but I'm not doing anything with that because I'm asleep. So there's nothing I really can do, and I wasn't going to set pending orders either. And then again, news today at 9 o'clock, which ended up sending the euro up and higher, sent the dollar lower, and the indices rallied for just a minute before they tanked. So, and that was kind of another thing too. When the indices dropped and the dollar dropped as well, that's kind of how I figured that the indices were super weak. Because again, if there is that correlation there, right? Which I don't put too much faith in because I just don't have enough experience with that, with the intermarket of the dollar index and indices, right? Because normally I'm like, well, indices are lower, dollar's lower, you know, what the hell? So I'm thinking, all right, dollar is lower, indices are also lower. So if the indices aren't going higher like they should, quote unquote, then we have terribly weak indices. You know what I mean? If it's failing to go higher and it's going lower instead, that's weakness. And what did we get? We got extended weakness. And then even right now, we've barely rallied a little bit. And now we're just back at the 41.22s. I mean, today is a weak market day. Markets are heavy today. Okay. Now I didn't hold any partials for the close. My final exit was 41.20. So I'm not in any more shorts. And I think I mentioned that earlier. So I don't care what goes on. I mean, we could fly up, we could dump lower, but I'm done. So I'm going to be indifferent either way. So I'm not looking to do anything. If I was forced to do something, I would probably be miserable because I don't really have a high conviction in either direction. So I know Ricky said that we may rally this afternoon. I think that's a possibility. I'm just not sure. I mean, we've already had a significant movement today, so I'm not expecting another significant movement, especially when there's only an hour and 15 minutes left in the day. So had I not traded this morning, I'd walk away and not do anything today. I know that sounds bad. Oh, John, you keep saying that. You keep saying that. Well, look, dude. Patience is a virtue. You got to be a sniper, man. You got to be a sniper. And waiting sometimes is hard. I don't have anything for you outside of that. I really don't. So, euro. Oh my God, silver. What the fuck is going on there? Look at that, dude. Oh my heavens. Fourth week back to back. That is phenomenal. That's phenomenal. Because right from that imbalance to where we are now, oh, it doesn't give me a percentage. 21% in 4 weeks. Sheesh. I wonder who went online and was saying that they were buying silver down here. I wonder who would do something like that. Who would do something like that? But look, ego's the enemy. I get it. I get it. But, you know, there was a reason, folks. That's what I'm trying to tell you. There was a reason that I was buying silver. Physical silver down here. Okay? Because of that weekly imbalance. Which also is a weekly mitigation. Bam. Overlap. Overlap. See ya. New high. Look at that. We're at 25 for silver. We are at 25 for silver. That is amazing. And I'm trying to fight the thought of I should have bought more. Well, fuck, I should have bought more. But, you know, sometimes you know and sometimes you don't know. You know what I mean? So, sorry, I was just, I didn't even know that was up today. That's why I was looking at it. And I guess that really came off the news anyway. So that was, I guess that news was our excuse to go higher and making that new high from February. So we have a new high of the year, I think. Let me just look at something real quick. So there's January. Yeah, so we have a new intra-year high, which is good. And then 2022 is here. So the high of last year is up at 26.95. So that may be our next target. And then look at this too. This monthly time frame. That was a down candle right here as well. So talk about massive, massive confluence. Yeah. Man, that daily is, again, if I was writing another trading book, this would be in there. And not that I would do this, but if I did, I'd go fucking post in that book that I was buying silver in here too. I'd go post the dates and everything because all that shit is there. So I'm just saying. I'm just saying. Look at what these high. If there's one thing I want you to get, because I'm only gonna be here like another 5 minutes because I gotta go. If there's one thing I want you to get out of today, it's higher time frames. Okay, higher time frames. Write that down, underline it, put it on a sticky note, put it on your fridge, get it tattooed if you want to. Higher time frames is where it's at. Now I know a lot of the times I show you like 1 minute finesse and all that. Yes, that is true, but it's in alignment with higher time frame. Okay, high probability downside targets coming off of something higher time frame is just mint, bro. It's mint. Okay, but a lot of the small time frame movements are not going to work for you if you have no idea what the higher time frame is doing. I put a video out on that. It's called "Are You Tired of Getting Stopped Out?" with the Pepe meme, or the Pepe crying on the front of it. Right? And I gave you 5 different things to consider if you're someone who gets stopped out a lot. And that was one of them, was zoom out, bro. I love the 1 minute. A lot of people on Twitter hate the 1 minute. That's because they can't do shit like what I'm showing you, okay? But that's why, though. There's nothing wrong with the 1 minute. It's just you have to, align that with something higher. 5 minute, 15, 1 hour, daily, stuff like that. That's like where the best setups occur. Multi-time frame analysis. So, I mean, big moves on commodities, nice intraday movements on the indices. And, obviously many years ago, I wouldn't be able to do this. I wouldn't have been able to come on YouTube and, outline stuff for you ahead of time. But I'm giving you, the biggest lessons that I've learned, and like where I stumbled and how I fixed those things, because we all go through very similar stuff, so I'm doing my best to give you the business here, and I'm showing you all the time frames, everything except the 4 hour and the 30 minute. I don't do the 4 hour either. Someone on Twitter said that you're not going to be successful unless you look at the 4 hour. Okay, well, again, I'm going to continue to catch moves like this without ever looking at a 4 hour. So people on Twitter just say the most dumbest shit, bro. Dumbest shit. 4 hour. Fuck a 4 hour. I never look at that shit. Never look at that shit. I never look at it. But you see me get wick entries. No need for a 4 hour. No need. Gold finally hit 2020. I honestly have not looked at gold, but it is up more so on a structure base level. It is flying more so than silver is. So, I mean, yeah, I think 2080, 2100. I mean, that could easily be on the table in the next few months. Especially if they're going to kill the dollar. If they're going to just body the dollar, then yeah, I could definitely see gold flying past that. Like, not just here and then like rolling over, like here and like flying past that. Like all-time highs plus some for gold, and then hopefully that continues for silver. Now, I don't know if silver's going to make all-time highs. It would have to be 50. Silver would have to double from here. And I'm not trying to call a move like that. No 2008, 2009, 2011 shit. Okay, I'm not trying to call moves like that. I never have. Not on silver, at least. Orange juice, you can go look at orange juice, but I don't think any of you were here from 3 years ago when I was talking about orange juice. And I didn't expect it to be the bottom anyway, so I'm not going to take credit for it. GJ and EJ, we don't have time because I'm gonna be off of here in 2 minutes. So tomorrow we can, but we don't have time to go through all the currencies today. So Ivan, we'll look at it tomorrow, and just come back on here and remind me tomorrow. Daily, 1 hour, 15, and 1 minute is the time frames you look at in that order. Yeah, weekly, daily, 15. I usually don't look at that 1 hour. Sometimes, but more so the 15, 5 minute, and 1 minute. Yes. How do you feel about the Federal Reserve with the coin? Which coin are you talking about? The CBDCs, the central bank digital currencies? I have no idea about any of that shit. I leave that up to Zach and Jordan. And some others. I don't know. I don't know much about it. So, yeah, guys, look, I'm telling you, I say this all the time. Crypto's not my forte, man. I'm not good at crypto. I buy NFTs, they go to shit. I've bought in, I think I bought into like 3 projects. All of them went to shit. So you know, I'm not saying crypto's a scam because I don't think it's a scam, but everything I touch in crypto goes to absolute dust. So that's why you see me stick to what I know. I stick to my strengths, as John C. Maxwell wrote in his most recent book, The 16 Laws of, or the 16 Undeniable Laws of Communication, which ended up being on Amazon as well. It's on the Amazon review, so I'm glad that made it. He says to stick to your strengths, you know what I mean? And that's what I do. I stick to my indices and sometimes the majors like Euro, British Pound. But with crypto, I am the worst. Okay, I'm an inverse. If I say long crypto, you want to short that shit. All right, so just telling it like it is, okay? Just telling it like it is. But that's gonna be it for today, guys. You know, so if you got some value, if you're still here and you got some value, guys, drop a like. I would greatly appreciate that. Helps us get on the algorithm and everything else. And just so you guys know, if you didn't know, we have memberships available for you guys. You can get some cool chat emojis. You get loyalty badges. That's how some people have snipers in their name next to the chat and next to the comments and stuff like that. So tier 1 membership is like $4.99 a month. Tier 2 is like $9.99 a month. It's dirt cheap. I made it that way because I'm not trying to get rich from you guys. I'm not trying to do that. So you can do that if you want, and that would help support the channel as well. So yeah, thanks guys. Be blessed. I will see you I think tomorrow. What's today? Tuesday? Yeah, so we'll be here tomorrow, same time, same place. Be blessed, and I will see you then. Appreciate you too, Elijah. Later, Ivan. Thanks for your time as well, Naruto.